Alright guys, thank you guys so much for coming. We're Warrington Ventures. We can stay, you guys can stay seated. Thank you guys so much for choosing us on your Thursday evening. I know how things get kind of crazy in this time of the year as well, you know, the fourth week already, but thank you guys for choosing us. We're Warrington Ventures. So without further ado, let's just get started. So.
You're on that screen.
Doesn't work? Oh, why does it do that? There we go. So, wanted to quickly introduce you guys to the e-board and quickly just direct your attentions. There are 8 of us here, if I'm not mistaken. 9? Yeah, we're 9 of us total, but we're missing Alex. He's at an event today. He's going to be the main one teaching you guys the curriculum with Vinay and I supporting him. But that's why, you know, you're not seeing him here. Just wanted to clarify that. But my name is Dairo Sanchez. I'm the president and one of the co-founders of Warrington Ventures. Initially, we were named Gator Impact Ventures, but we'll go into later why we recently shifted to Warrington Ventures. But a little bit more about me. I'm a 4th-year finance major. I was born and raised in Miami, Florida. My family were initially immigrated from Cuba. And this past summer, I actually interned at an investment bank called the Bank of Montreal. And it was a very fruitful experience. I interned in the M&A team, got a lot of tangible experience. But yeah, happy to answer any questions about that if you guys want afterward. But yeah, it's a little bit about me. We can just go down the line if you want.
I'm Antonio Tabar. I'm a 4th-year business admin major. This summer, I also had an internship working at a consulting firm called ACA Global, which basically specialized in optimizing the GRC capabilities of just financial advisors. I'm the director of communications here, so I'm pretty much handling the newsletter, which we're going to go over in a little bit. And yeah, I support our club in anything that we have to do as far as writing.
Hi, welcome everyone. My name is Vinay Krishnadis. I'm a 3rd-year data science major. This past summer, I worked at MasterCard in data engineering with their B2B bank clients. And yeah, I joined Warrington Ventures when it was Gator Impact Ventures a year ago at its inception. Got really involved and I'm excited to present, you know, our progress this far and the opportunities we have here. Oh, also, I'm the vice president this semester.
Hey guys, my name is Abhishek Kandalia. I'm a 3rd-year MSF student. This summer I interned at Lightning Partners. It's an investment bank down in Orlando. Specializes in SaaS. And then right now I'm interning at PS27. It's a venture capital firm based out of Jacksonville. I'm your head of deal sourcing, so all my work is really trying to locate venture capital firms down in the southeast area and building strong relationships with them. So it's a little more about me.
Yeah, so my name is Daniel Walala. I'm a 2nd-year finance major. Over the summer, I worked for a small private equity shop down in Tampa. Similar to Vinay, I was part of the first analyst class last year. It's a great experience. And right now, I'm the head of advisory, so essentially just managing and taking on all the projects, but we'll get into that later.
Hey guys, my name is Gia Defeaty. I'm a 3rd-year finance major, and similar experience to them. I also started when it was Gator Impact Ventures. I was the secretary to begin with, and now I'm your director of operations. And then this summer, I didn't have an internship, but I studied abroad in Spain. So if any of you guys have questions about that, you can feel free to ask me about them.
My name is Riley Barrett. I'm the secretary. I'm a 3rd-year information systems major. I was also in Spain this summer, and then I just do a lot of behind-the-scenes stuff, but if you guys have any questions, I look forward to getting to know you all.
My name is Grant Blackburn. I am your director of marketing. And Gia and Vinay, I started last year as a project manager on the management team when it was still Gator Impact Ventures, and now I'm helping just coordinate our entire online presence, and there's a marketing committee I'll be heading, which will be going to.
Cool. Thank you guys so much. Yeah, still a lot of stuff. And as you guys can tell, a lot of us, you know, Tony and I initially founded the club, but as you can tell, everybody initially started as an analyst or started in a lower position. And as you can tell, mobility is definitely the case here in this club. So if that's something you guys are looking for, I promise this is the place to be. So you've probably been hearing a lot, you know, from us, like, you know, give to Warrington Ventures, and what does that really mean? And, you know, we really are the same, but our goal really was to cover not just venture capital, but the buy side as a whole. And not only that, we also wanted to embody the business school a little bit better. And we felt that a shift to Warrington could embody that like way better. But yeah, instead of just venture capital, we're going to be touching on topics in private equity and growth equity, and maybe touching on other alternative investments like how do hedge funds work. Our advisor, Farida Aitali, teaches a derivative course, and we're probably going to bring him in to get him to talk to you guys. So what is Warrington Ventures? We're pretty much the same. We're here to connect you guys to startups and at the same time teach you guys about the buy side. It's very twofold. Our mission is to connect you guys with them, but our vision is to make the best possible accredited investors coming out of the Southeast, and that's you guys. And we're here to teach you the best topics that we can. So Alex would be here explaining this to you guys, but I'll quickly run through it with you guys. And feel free to ask any questions of like what specific topics we teach here. But first, we wanted to go over the fund structures today. Just a quick overview. Today is not going to be in-depth or intensive at all. Just kind of briefly going over the topics. Then we're going to be going into valuation 1. So how do some of these companies value these businesses? How do private equity or venture capitalists value these businesses? And we're going to go through different valuation terminologies and methodologies. Valuation 2 is more of just a LBO workshop. It's going to be very in-depth, and we're going to be showing you guys a model that we built over the summer. And then starting a fund. So let's say one day you guys want to be venture capitalists, or you want to start your own shop one day. How do you do that? We're going to go step by step of how some of these people started their own funds and show you guys some testimonies. Private equity 1 just goes more in depth of like the day-to-day of an associate in a private equity shop. Private equity 2, we're probably going to bring in a guest speaker at that period. And then venture capital 1 is kind of going over just the like brief topics of venture capital 1, and then we'll go much more in depth in venture capital 2, which is like how to draft a term sheet, what's a waterfall model, what's a cap table, things of that nature. And then entrepreneurship, we want to bring in a guest speaker, probably one of the companies we'd be working with at that time, or an MD. We're still up in the air about that. And as you guys can tell, we want to also leave a lot of what we teach you guys in your hands as well. We want to hear from you guys on what type of topics you guys want to learn. Asset allocation is once these companies actually invest into these businesses, how much gets distributed, how do they determine how much gets distributed, and then portfolio management is once these firms are actually invested into these businesses, how do they follow on and check in with these businesses? Yeah, and today is September 14th, and the last GBM will be November 16th, just to keep in mind. And then these are the sources of our curriculum. I actually brought them with me. So the bulk of last year was venture strategy and venture deals. And we also touch on equity valuation and some topics from Intelligent Investor. It never hurts to bring on topics from Benjamin Graham. But yeah, if anybody's ever interested in renting one of these out as well, you can ask one of us. I know some of us have several copies, but this is like the bulk of it. And a lot of what we've learned as well has been through the connections we've made through UF Innovate, which we'll go over more later. They've been a great resource for us. But yeah, that's pretty much what we're going to be teaching you guys. And to start, we're going to be going over the analyst program. So Daniel, Grant, and Abhi will be going over the programs. And if you guys are interested, there's going to be QR codes in the second slide of each of their initial slides. So yeah.
Yeah. So as I mentioned earlier, I'm the head of advisory, so I'm the head of the advisory committee. So essentially through this committee, you'd have the opportunity to work on real projects with real startups, right? We've been fortunate enough to form partnerships with both UF Innovate and Santa Fe Seed, which they're startup accelerators. Essentially, they take in startups from around the area and try and build them, and they've been kind enough to open up their ecosystem so we can work with their companies, right? Now, essentially, some of the things you can gain out of working with them are the potential to intern with the partners down the road, build your resume, build a strong network, work side by side with their executive members, and apply the skills that we actually learned here, right? So I'd highly recommend it. I was part of the analyst class last year, and I worked on 2 of these projects actually, Atlantis and Mars Aerospace. A very fun experience, very different experiences, and that's something I'd like to emphasize. Each experience, each project is extremely different, and you have the opportunity to kind of choose where you want to go. This past week, we've actually been in contact with UF Innovate in sourcing a biotech company, which is forming a device to kind of help with Parkinson's, right?
Yeah. So there's this new biotech company. So what UF Innovate does a lot of times is they find like these, since we are a research school, they find like these crazy scientists. And this is how they put it to us. They find these crazy scientists and they pair them up with true business professionals at UF Innovate or on campus. And they come together to come up with a business structure and how to actually turn their idea into profits. And this is what UF Innovate is tasking us to do in some of these cases. So for example, at Atlantis, we were tasked with finding different verticals, and the team, the Atlantis team, will speak to you guys at some point and tell you more about what they did. But we were tasked with finding new verticals for them to penetrate. And for this new biotech company, they basically found a new way, a non-invasive way to track different brain diseases like Alzheimer's, Parkinson's, without there's like these dyes. It's too much science, but basically there's like dyes that are very toxic to the brain, and they figured out a way through MRI and AI to detect these diseases very early on, and pairing that with drugs that will be able to prevent these diseases at early stages. And it's a breakthrough technology, and we're tasked essentially with building the business from scratch. And if that's something you guys want to be a part of, that's basically the first project we have in the pipeline. And the next QR code will basically, if you just sign up, show your interest, and then in the analyst program, in the analyst application, just put advisory. That's what advisory is. And there is no stop, or there are countless numbers of ideas coming out of UF Innovate that our task is to figure out how to turn them into businesses. That's in essence the advisory program. In addition to Santa Fe Seed, there's a bunch of startups over there in their incubator that are waiting to pair up with us. So,
yeah, if this is of any interest to you, that's the interest one. Just scan to sign up. And if you have any questions or want to reach out and learn more about it, this is all my contact info, my LinkedIn, my phone number, my email.
I'll give you guys a second if you want to fill out or not fill out, but pull up interest forms. But then, this is our second committee for the analyst program that we are having here at Warrington Ventures. It's the competitions committee. This committee is really based on competitions, as the word says. So we've got a couple of competitions in our pipeline. A venture capital investment competition. It's an international competition where schools from all around the nation, they come together and they compete in a VC competition. It's a great opportunity. We actually had a team last year participate at UConn. They came third, and it was a great opportunity for them. They could definitely talk to you more about that later afterwards. But then we also had a competition with Santa Fe Seed, where they basically want students with startup ideas to come to them and basically pitch their idea, and the winner of that competition can get $2,000 to either jumpstart their business or continue funding their business. And that's a really great competition. If you guys have any startup ideas, or if you have any existing businesses that you want to kind of continue pursuing. And then also through the FPD, Mr. Dolinsky, he wants us to host internal VC competitions throughout the entire business school. So if you guys want to represent Warrington Ventures there, that would be an absolutely amazing opportunity. And yeah, those are two competitions that we participated in last year. So one is the VCIC that I told you about, and then also the next one is the FSU competition, which Jackson right here also took participation in. So that was those are
about the pitch competition with Seed.
Yeah, I just already.
Oh, okay.
And then that's the interest form for the competition group if you're interested. And then there's my contact information if you want to know more. Let me give him a second. We're good.
I'll be running the marketing committee, and a big part of that is just expanding our online presence and engagement, both to students and the companies we work with and hope to work with, and the VC companies. And so a lot of this is going to be, search engine optimization. You're going to be graphic design and just web design and copywriting and email marketing, and occasionally helping out with materials for the newsletter, which we'll go into later. And yeah, you'll really get to flex your creative side if you're interested in that. Here's the QR code for the interest form. and all my contact information, my LinkedIn, my number. I do answer I do listen to my voicemail, so if you can't reach me, please leave a voicemail. I will listen to it and get back to you, I promise. And my email right at the bottom.
I know this is a lot of QR codes too. We can go ahead and send out kind of like a consolidated version of all the interest forms into the group me later. So if you guys didn't have a chance to scan it now, you can scan it later.
Also, all of these QR codes, the links, the interest forms, they're attached to our link tree, which is on the back of the business card. You all might have gotten a business badge.
I think our link tree's on our Instagram bio too, right?
Also in our bio of the Instagram.
And I will be tagging that link tree I will be pinning it to the top of the grouping, so it'll always be visible.
Cool. All right, so what have we been doing on the back end during this whole rebrand from Gator Impact Ventures to Warrington Ventures? One thing I want to spotlight is that we as a team, the board, worked really hard over the summer to facilitate this transition and to get you guys a really well-curated program for this semester. I also want to touch on, Grant, very humble guy. He actually built our entire website, did a lot of work with the back-end marketing, the rebranding. And if you check out our website, it's very state-of-the-art. So if you join our marketing team, working with Grant, you'll be working on some high-level content creation and web design. So I really wanted to spotlight that because that was a big initiative over the summer that we as a board collectively teamed up on, and Grant really took a lot of initiative with that. So some other things that we did on the back end, more recently, last Friday and this week, as Daniel mentioned, we've been in constant communication with UF Innovate. So last Friday, we were able to connect with the managing director, who's our point of contact there, Jackson Streeter. I've met with him many times. Very, very eager guy to help the club, very knowledgeable in VC and very well connected with startups and portfolio companies within UF Innovate. So we connected with him, and as Daryl mentioned, he connected us with this high-level biotech company founded by a panel of scientists out of UF, doing a lot of state-of-the-art work in biotech and in AI as well. So UF Innovate, what you'll see is they funnel us really high-level, groundbreaking technology companies. Daniel, over the summer, I know Avi was part of that team as well, worked with Satlantis, which is a microsatellite company, aerospace company as well. So the companies that come out of UF Innovate are very high-level startups and really interesting to really get into the weeds and learn their business, because you will just seamlessly learn a lot of high-level content as well. So we generated that project with the biotech company that's rolling as we speak. They're really excited and eager to get on that project, and the FAFSA Reformer Committee and a team for that, that'll get underway as well as other projects we're always sourcing with UF Innovate as well. Another development that came this past Tuesday, Abhi, Daron, and I, we met with Seed and we forged an agreement over at the Seed, at the Santa Fe Incubator, the state-of-the-art facility they have in Santa Fe, really unprecedented in the community college space. It's a really cool space that they built there. And they have allowed us to use their space to organize and put on pitch contests sponsored by Warrington Ventures. They're giving us $2,000 of prize money to award to startups. They're giving us creative liberty to source students for this competition. These can be students with an idea without an existing business model, to students with an existing business model who are looking for $2,000 of capital to launch their business even further. So a really interesting competition that we get a lot of creative liberty with, and Seed will be allowing us to use their space to host it. So a really exciting development with Avi's competition committee that I think is a really cool opportunity for Warrington Ventures to really bolster our credibility in Gainesville. And so one thing about Seed is, what's the difference between Seed and UF Innovate? Well, broad strokes, Seed offers a lot of underrepresented entrepreneurs in the local Gainesville area a space to grow their business. So you'll see a lot of local businesses coming out of Seed, a lot of successful Gainesville startups. I don't know if you guys are familiar with a rope climbing gym local to Gainesville. I forget its name, but
Yeah, the Knot.
The Knot, exactly. So I met the founder of the Knot at Seed. He's one of the many local business owners that works with Seed really well. And the Knot is a multi-million-dollar generating business. It's amazing to see some of these businesses are more than what you would expect. And these are some cool opportunities as well to really get hands-on in the Gainesville ecosystem and meet a lot of local entrepreneurs, underrepresented entrepreneurs. So that's the main distinction between Seed and UF Innovate. And additionally, on Tuesday, we also forged an agreement to deliver a paid VC workshop. Why is this so important? Well, it's a huge boost to our credibility. We'll be putting on a 2-hour workshop, again, at their facilities, where they will charge people to attend, and we will profit share 50-50. So it's a really serious commitment on our end, and it's a really cool opportunity. And yeah, if you're interested in getting to learn more about these opportunities, feel free to contact me. With the pitch competition, feel free to contact Ali, as he'll be leading that up as well. So some exciting developments we've been working on in the back end. Furthermore, Ali just met with FPD today to provide updates and progress as an organization. So those of you not familiar with FPD, it's the Finance Professional Development Program here out of Warrington. So they represent very niche sectors of finance that you can really get hands-on in and learn a lot more about the professional landscape. So we, as Warrington Ventures, represent the venture capital sector of FPD. So it's a serious obligation, and we have accountability to FPD, and that also, with that comes accessibility to FPD, networking opportunities with different sectors. We are really trying to streamline collaboration with other sectors this semester, so bring some other people in, and you guys will have that opportunity as part of the VC sector to collaborate with other sectors, and it's a great networking opportunity across FPD, an organization that's relatively new here at UF, and that's growing in its network and its involvement. And so with that comes trips, guest speakers, different collaborations as well. So another interesting development on the back end. So now let's step back for a minute, and I want to just take you through a quick case study to just get your mind rolling on, what is valuation.
Yep. Before we get started with this, we want to do a quick icebreaker with you guys. Just quickly introduce your partners to your left, and then kind of go over these questions that you guys see here, and then we'll just pick on you randomly right after. So yeah, get ready.
We're like shopping, but I like
It's up to you. So if you want Also, pretty much that. Valuation came out with its March 2021. But now it's search fund
I know like all of them, got a pretty cool. You literally just I know. Late May, August.
Alright guys, alright guys, we're gonna get back to it, and I don't think it'd be fair if we picked on somebody that's new here, so how about Guy?
Okay.
So why do you think Instacart's valuation took a steep dive over the course of just 1 year?
Okay, so there's a few things we came up with. First of all, it was like general market conditions were better a year ago. Second of all was COVID, which also was like a huge catalyst for Instacart. And also IPOs in general, we saw like we were talking about like a trend, how like IPOs started at a really high valuation and then dropped since then.
Yep. Very, very good points. There are no wrong answers here, unless you do say a wrong answer. I will tell you, so don't worry. But yeah, those are all very solid points. Anybody else want to give it a stab? How about Greg?
So I didn't know we were supposed to like discuss this, but if I had to guess, it would just be due to the fact that they're just in a really saturated like market.
Okay.
Because you already have big players like Walmart and Target already introducing their own products that are very similar to Instacart, and they're just simply just going to keep
Okay.
competing. That's my biggest guess.
Okay, cool. Anybody else want to give it a stab? Yeah.
I don't know if it was already said because I walked out, but their initial valuation was in early 2021, which is tail end COVID.
Right.
And that was a massive business, and overall in general, delivery services have gone down. Stuff that's online has gone down since then. So overall market trends, along with competitors, people said, just decreased the valuation massively.
Very cool. Yeah. Yep.
So yeah, essentially this exercise is to get you thinking about the idea of valuation. And as we touched earlier on in the curriculum, we're going to be talking about valuation in depth. But the key question is, how do you quantify a business? How do you put a number to an idea that's pre-revenue, or a pre-seed company, or a very early stage company that's burning cash? How do you put a valuation, a marker to that, and how reliable is that number in the long term? So as you can see here, 24 billion to 9.3 billion in just under a year shows the volatility of valuation, right? There are a lot of quantitative and qualitative aspects that go into valuation. Qualitatively, we can think about, the business model as a whole. As Jackson mentioned, during COVID, Instacart, you would think online delivery would be skyrocketing. Now, qualitatively, we can think that, this business might be, on the back burner, as well as competitors. That goes into valuation as well. Different qualitative aspects, but also quantitatively, how do you get to that 9.3 billion number, right? Think different things like price per share, different models that go into valuation. These are things that, we're going to crack the code of valuation here at Warrington Ventures, because that is a true key to understanding private equity and venture capital, alternative investments. Valuation is a big mystery, right? How do you come up with these numbers? And how do these numbers differ from a founder's perspective to a VC's perspective to just an angel investor perspective, right? How do these numbers change across those perspectives? So we're going to crack the code of valuation here, but just looking at it through a broad lens, understanding the volatility of valuation, and just thinking about the qualitative aspects of a business that can lead to these numbers dropping is a great exercise. But if you are curious to crack that code of valuation, it is extremely fundamental to all things buy side here. So stay tuned for that later, and this is just a short exercise for this week's current event case study.
Yeah, and just another quick note, a lot of times when we speak to the MDs at UF Innovate, a lot of times pre-revenue companies are at the mercy of subjectivity. So it's really up to the investor's mercy to say, like, I think you're worth this. And they really can't say anything because these companies have no leverage. So a lot of times, some of these valuations come from just psychology. How does the management team present themselves to these investors? Those are things that we're also going to explore.
just to add on to what Vinay was talking about, you know, any valuation that you see, whether it's pre-revenue or whether you're talking about a company that you're looking at on the stock market, every single one of those valuations comes with an asterisk. Because no valuation, no matter how much time you put into it, no matter how much AI you've leveraged into that number, can take into account every single macroeconomic event that's happening globally. And that's potentially affecting the psychology of the investor. Because ultimately, that's what it really boils down to. People are the ones making the trades, and people are the ones determining the value of that asset.
Yep. And I know some of you guys are freshmen or might be new to these concepts. That's why we're slowly going to introduce you guys to them today, and then we'll start going more in depth if this is truly a career you guys want to pursue. So this is just a quick overview slide, introduce you guys to some different finance sectors that you may be interested in. So most of these are covered already within FPD. For example, private equity, investment banking, venture capital, corporate finance. All of them are covered in these. We don't really have a commodity sector. That's more for like traders sitting in a bank, collectible structured products. Those are very niche things in finance. Those are things that you personally have to discover yourself in your career if that's something you're passionate about. But broad strokes, we're going to be covering private equity this semester. That includes growth equity, venture capital, and things of that nature. Private debt, hedge funds. I feel like hedge funds are very cool, very hot topic today. So we also want to cover that today. Leave that avenue open for you guys. Real estate's also big, but we're not a real estate club. Yeah, so pretty much just wanted to emphasize that this is what we're covering. And quickly, let's just go over these topics. What are we going to be going over this semester? So venture capital, early stage. Think of companies that haven't even generated $1, just an idea in some cases. How do these companies basically turn into multi-million dollars, like multi-billion-dollar companies like Google, Facebook? How does that happen? It starts with venture capital. And we had a whole lecture last semester on the history of venture capital and how it basically catalyzed the whole U.S. economy in the early 1920s and 1930s. If that's something you guys are interested in, I can send you those slides as well. But sometimes these investments are minority stake, which means that they're asking for a little piece of the pie in their common shares. So like maybe 20%, 30%. They won't take a large foothold, like for example, a leveraged buyout would. That's more private equity focused. But sometimes we'll see these words thrown out in venture capital like angel, seed stage, early stage. Angel investors are just very wealthy individuals that invest into companies and have their own portfolios of startups that they invested in. Seed stage investors are those ideas, and they formally go to a venture capital firm to get invested. And then early stage VC firms, that's the same thing, but they might already have like ARR, which is annual recurring revenue, like a subscription-based service model, something of that nature. They're already generating cash or revenue. They invest in the pre-revenue, pre-profit, and typically the time horizon for these investments, as you can imagine, they're very early, and the harvest period is how venture capitalists like to say, or the exit period is after 10 years. So I invest day 0 or year 0, and then year 10 I expect to see 10x of my money. So if I put up 1 million, I'm expecting 10 million at the end of the whole time horizon. And there is no debt. There's another concept called venture debt, and we also had a topic discussion about that last year, but there is no debt in venture capital. It's all equity based, so just upfront capital. Growth equity is and also keep in mind that venture capital and growth equity are very innovative based. Think of Google, for example, or Facebook, very innovative companies. Those are venture capital and growth equity focused type of investments. Growth equity is more focused on, are these businesses generating money already, and how reliable can it be? How reliable of an investment can it be? So like it says there, sustained revenue growth, operating margin expansion. That just means that, think of an Instacart, or let's keep it even more simple, like a Publix. Grocery stores have very small margins. Operating profit or their net income to their revenue, it's very small. But they produce large volumes of revenue, which allows them to continue operating. Publix, we all think of Publix and it's like a great business, right? But their bottom line is very, very small when you actually look at their statements. But businesses like that are still very attractive to investors, because who can ever imagine a Publix to go down one day? You can't. It just won't ever go down. So yeah, that's basically the point of growth equity. Slightly profitable is the point there. It's innovative and it's slightly profitable, already generating money. Venture capital, they're not generating money yet, essentially. Leverage buyout, I'll give you guys an example here. So with leverage buyouts, they use debt to purchase these companies. So they don't, how can I say this? They're not putting up their own capital for these investments. They're actually taking out debt to buy out these companies, because when you learn later in your finance courses, the cost of debt is cheaper than the cost of equity. And over time, the numbers play out. So these are very attractive investments for these private equity firms. Some big names you might hear getting thrown around is like KKR, Apollo. Those are big firms that are very, BlackRock, these are very big names in these spaces. You might hear sometimes BlackRock owns the world. They have so many different investment vehicles. It's crazy. One of the largest being their real estate arm. They do leverage buyouts left and right. It's like their business model. But leverage buyouts, as you can imagine, when you take out a debt or mortgage, you need fixed income or basically stable cash flows in order to pay off that debt. So like when you buy a house one day, the only way you'll get underwritten for that house is if you're able to pay off that house in the long term, and you need basically stable income and basically proof that you have that income. And that's the same thing that leverage buyout firms try to look for in these companies. So yeah, the leverage usage is around 50 to 85%, and in some cases, there are growth equity shops that do use leverage. So very high level, those are basically the topics that we're going to be going over. As you can see, we didn't make this. This is directly from Wall Street Prep, but Wall Street Prep is also a great resource if you guys are interested. But yeah. And then I guess we'll quickly cover this very quickly. So to be very specific with venture capital, it is institutional, which means that they raise money from very accredited investors. And there's a specific definition of being an accredited investor. Your net worth needs to be very high. You can't be just a regular individual. I think your net worth has to be over $1 million, if I'm not mistaken. So VCs essentially raise the money from these people, pull it together, and then come up with investment ideas and present it to these people. And the people that they raise the money from are called limited partners. And the VCs in this case become general partners. And that's like a whole business law term, but it essentially means that there is no liability pegged to the accredited investors. Like when they put down their money, they have no liability. If anything happens to these businesses, or if the general partners do something very unlawful, they're not liable at all. All they have the rights for are the profits generated from these businesses. That's it. Also, some of the biggest players in Google, Facebook were large institutions like endowments, universities, pension funds. Those are the people that actually got paid off from those IPOs. Private equity, the difference between public, private equity. Private equity is just anything not listed on the stock market. And like I said, think of private equity like purchasing a house. It's essentially the same thing. And then venture capital, very focused on innovative, high-growth startups. And then anytime a VC is ready to invest, they do something called a capital call. So they essentially alert their investors that we're going to be investing into this company. They raise the money and they put it down. Very quickly, hedge funds. If you guys have heard of algorithmic trading, high-frequency trading, electronic communication networks, like think of stock exchanges. These companies use several types of investment vehicles to gain an advantage over the market. So like, in the moment that we're thinking, hedge funds probably generated millions of dollars just through a simple trade that took seconds. And it's because there's a spread between, this is getting very in-depth, but there's a spread between what you can buy a certain stock or security at versus what you can sell it at. So it's very specific. Like VCs, they also raise money through accredited investors, and they also most of the time use leverage. So very similar to private equity. But I just quickly wanted to go over this, introduce the topic of hedge funds to you guys. But I also have some more information on hedge funds if you guys are interested. We're going to be sending this slide deck to you guys. And then the last thing we're going to go over is where the market is today in terms of holistically alternative investments.
All right, so just to familiarize you guys with some of these buzzwords that are going around in alternative investments. If you guys, are plugged into, VC newsletters and so forth, you'll definitely hear these words throughout the news and so forth. So first off, in alternative investment trends, we're seeing a lot of trends with decarbonization, high investment in decarbonization. Now, one thing that we can tie to that is ESG and the overall, environmental, social governance initiatives that are being pushed in the investment space today is really pulling at the moral side of these investors and really pushing them to invest in decarbonization and incentivizing them to invest in these sustainable energies, sustainable fuels and so forth, sustainable technologies. So decarbonization is a huge hot topic right now. Innovative technologies in this space are attracting a lot of investments. Furthermore, you'll hear generative AI. Right? This is a huge buzzword right now in VC, but essentially what this comes with is, as you guys know, the recent rise of ChatGPT, OpenAI. Well, OpenAI originally started with VC investment, right? And so that has catalyzed this whole space of generative AI, and VCs are eating it up right now. Pre-revenue generative AI businesses in Silicon Valley, if you hear the buzz around there, generative AI businesses are the most attractive pre-revenue businesses on the market right now because late-stage companies are attracting a lot of the safer investments. The more riskier investments are going into generative AI. Furthermore, biotech. Biotech has always been a huge staple of VC because it is a high-risk, high-reward investment that usually requires you to be in it for the long run. Why is this? Because what goes into biotech? Regulation, FDA approval, clinical trials. This is a long-stage process that burns a lot of money, but if your pharmaceutical drug or your biotech device works and is approved, this is usually hundreds of millions, if not billions of dollars. So people that are willing to be in it for the long run are always going to be looking towards biotech for that high-risk, high-reward investment. And UF right now is big into biotech research, which I think is really cool. Furthermore, this is a more technical niche trend right now, but private debt fundraising. As Daron mentioned, limited partners, these are the guys that are putting in the money to be invested. HNWIs, high net worth individuals. These are usually the guys that fundraise VCs. Well, because of the market trends and so forth, high net worth individuals are holding on to their money a little bit more. They're not necessarily trying to risk and go into VC. So a lot of general partners and VC funds are looking to private debt to fundraise their funds. So it's a different trend that is a different kind of pathway you can take to going to high net worth individuals. You can go into private debt fundraising, and so that's a trend that you'll see right now in the market. Furthermore, challenges to the industry right now, something that you'll hear in the market is stubborn inflation rates. This extends to VC and private equity space as well. You also see regional bank failures. Last year, Silicon Valley Bank, Daron and I did a workshop on that at the DSI symposium last year where we gave a lecture on the Silicon Valley Bank failure. So if you guys want to learn more about those implications, you can talk to us. Furthermore, Credit Suisse, you see regional bank failures. Specifically, Silicon Valley Bank was a bank that had a lot of startup capital held within it, so it really spilled over into the VC landscape. VC deal flow, as you can see this graph in the top right, top left corner, you'll see kind of a downward sloping trend that's slightly been raising since late 2022, but over the last five quarters, the deal flow has decreased. So you'll see a lot of investment in safer investments in late-stage companies versus early-stage pre-revenue companies, being a lot more risky, are not seeing as much attention. So that's why the deal activity is going down. But as you can see from the second statistic here on the deal flow and exit metrics, it's a quantity versus quality space. So while the quantity might be going down, the quality is always going to be there in private equity and alternative investments. So that's why you'll see a 15.9% cumulative annual growth rate, or CAGR, between 2021 and 2026 in private equity. You'll see that consistent growth because the quality of these alternative investments is always going to be there, high return. However, the quantity has been going down, so the deal value has fallen almost 65% over the last few quarters. But again, it's a high risk, high reward business, so the quality is always going to be there, and the growth rate is always going to be there. Again, another niche statistic that we can see is trade sales in VC dropping more than 30% during the past 5 quarters, while sales to other GPs were 54% lower. This essentially means that the VC funds themselves are losing a lot more money in their investments.
What are GPs?
General partners. So again, when we look back at the structure of a VC fund that we'll get into later, it's limited partners putting forward the capital and having limited liability, and the general partners are the ones that are actually going and making these investments, screening startups, and taking on a lot of the risk. So GPs obviously are seeing a decrease in their trade sales because of the limited deal flow and so forth. Another statistic I want to direct your attention to is this IPO market. So how do we measure success of a VC or private equity investment? Well, we look at the exit, right? And one of the most prominent ways to exit a company is through IPO, exiting a private company, going public via IPO. So you can get a good idea for what these returns are, what these exits are by looking at the IPO market. And you can see here that it's slowly declined, but is again picking up, but again heavily declined at the end of 2022. And who does that impact the most? Late stage companies, because these are the companies that are moving towards IPO. And so these late stage companies are seeing a lot of impact from this limited IPO market because they're the ones that are trying to take their company public and go for that big, big profit at the end for the VCs and private equity firms. So just some statistics, some current market trends to keep your finger on the pulse of VC and alternative investments. And yeah, we'll be trying to keep you guys up to date with these trends all the time because this is the premier VC and alternative investment presence on campus.
Yeah. One last little quick fun fact I'd like to point you guys. This graph right here comes from I think they call him Doctor.
Oh, Mr. IPO. Yes.
Mr. IPO. Jay Ritter is a researcher here at UF, and this graph comes directly from him. He's done a ton of research here on campus. And Vinay and I actually had the privilege of speaking to him last year, brainstorming different topics in IPOs and venture capital. So yeah, if you're ever interested in his research, you can look him up, and he has a bunch of papers. But yeah, that was a cool little quick bit. But yeah, guys, so this is basically the end of the content that we wanted to show you guys. And I quickly wanted to pan back to the curriculum. And as we progress, we're going to go a little bit deeper and probably bring in some guest speakers for you guys to kind of go more in depth. But just wanted to put the ball in your court and ask you guys if there's anything specific you guys want us to touch this semester, because we really want to tailor it for you guys and make this as fruitful as possible for you guys. So any thoughts, any ideas? We'd love to leave it to you guys. Yeah.
Are there plans for having any potential networking events where other folks will bring representatives from different companies to come and speak, and then afterwards they'll take resumes, or just being networking?
Yeah, actually, we have a couple of things in the pipeline. We didn't want to advertise it yet, but we want to do something called coffee chats with you guys, where essentially we bring in a professional private equity VC is really the goal, and get them to go to Opus or to Starbucks, whatever it may be, getting a small group of students to go and just speak to him and ask him questions and just talk to him for an hour, or them, whatever it may be. Yeah, that's really the goal there. In addition to that, we are planning to do a lot of socials. We want to do a lot of things with FPD. We're still in the works there. It seems like we're going to do a lot of things with the investment bank track and fintech, but we still have things in the works there. And yeah, we also want to do internal socials. Like last semester we did a poker social, and sometimes we brought pizza. You guys run it. We want to do more things like that.
Yeah, and one thing on that note of the networking opportunities. So if you guys are interested in getting to know some VC funds better, we have existing connections with vocab partners. We actually placed one of our analysts last semester at an internship at vocab partners, which was a big win for us because that's our ultimate goal here is to get more people from UF involved in VC. So our existing partnerships with Florida funders, Daron and I, another development that we worked on was creating a class that we're currently piloting for VC. It's an undergraduate special topics class. So we're currently doing a project with Florida funders. If you guys would like to learn more about how the class is going and how to get involved next semester, it's a really exciting thing. But that connection with Florida funders, we're going to try to get them more involved with the club and provide some internship opportunities. Also with the MD of UF Innovate, Jackson Streeter, he's involved with multiple VCs across Florida, but I know the most prominent one being Deepward Capital. We're going to bring in a guest speaker, a principal from Deepward Capital later on this semester. Great resume building, network opportunity, a great guy to hand off the resume to. So yeah, that's a great thing to bring up, and we're going to try to bring up more opportunities like that with accredited VCs. And also startups looking for interns as well. It's something that I want to bring through the door for you guys this semester.
Yeah.
I wanted to know because I'm interested in venture capital, and there aren't a lot of people on campus that pursue this. So I just wanted to know if you guys will be have like a mentorship program or something like that, where people from exec or anyone to like talk to about like to guide you through the process.
Yep.
Because there's like a lot of resources for like investment banking and people want to go into that, but for venture capital, it's like a lot more difficult to find resources.
Yeah, definitely. And one thing I want to emphasize with you guys, like this is as much of a career development club as it is just, a startup VC club. You can use any of us as a resource for anything. It doesn't matter if it's career, life, whatever it may be. Please, like none of us bite. Like we're happy to talk to you guys. Abi's interning actually at a venture capital shop right now. So if you have any questions about how he landed that, feel free to ask him. If you really want to go much more in depth and you want to network with, some of the people that we've been talking to, we're happy to facilitate a connection and maybe you on your own, or we'll obviously try to foster maybe a mentorship opportunity for them. To answer your question more directly, we don't have like a direct mentorship program with some of these professionals. That's obviously the goal in the future. But obviously, like these people are very cool. Like if we ask them if you wanted to speak to them like once a week or once a month, whatever it may be, I guarantee they're more than happy to do that. Like they're very cool people. Of course.
You speak a little bit more about how the club's going to be helping the biotech company?
Sure. On the left.
So I can touch on that really quick. Obviously, a team that will be working with them is going to be signing an NDA, so can't really get into the very nitty-gritty specifics, but you'll be working on, you'll be creating a letter of engagement, be specific deliverables, and at the end, similar to the Satlantis project, where we'll bring in the people who worked on that, they can tell you more about it, but it's a semester-long commitment, and you'll be having specific milestones that you'll be hitting, and at the end, you'll be creating a tangible research report for them to use in their business development. Now, the nuances of that research report, obviously, you'll have to talk to the founders and talk to the scientists, sign NDAs and so forth, but it will be a tangible project that you can then put on your resume and talk about with recruiters. Obviously, we don't want to breach confidentiality, so please, if you work on one of these projects, don't violate an NDA, but it will be something tangible. So that's kind of what I can say right now. Do you have a question?
When do you transfer the second semester? I think you want to cover it up until November 16th.
Most of the time, we'll probably cover these topics, but what I was thinking was we go a little bit deeper into some of these complex models, through Excel, showing you guys LBOs, showing you guys waterfalls. We want to do kind of like a quasi Shark Tank where you guys brainstorm like a startup idea, and then we'll essentially, either us or you guys will function as VC investors and value each other and pitch to each other. Yeah, I mean, those are just ideas right now. We really wanted to focus on this semester, but next semester is going to be much more applied.
Yeah, I'd say the key things that we already have in the works for next semester with the competition committee is VCIC. So FPD last semester in the spring, they flew myself, Daron, Tony, and a few others from the club. They flew us out to UConn and paid for us to stay there and compete. We're going to be sending another team as well. I don't know if it's going to be UConn again or U Michigan, but we're going to be sending a team in the spring to another university to compete regionally. And we're also going to be hosting schools at VCIC here at UF in the Southeast region. So that's going to be a huge event. Warrington Ventures is going to be putting that all on. We're going to have massive backing from FPD. There's going to have to be multiple schools coming in, multiple VC professionals, multiple startups. So it's on us to essentially, the host school has to put up the prize money, has to put up the startups, real startups that are going to be evaluated in this competition, and a panel of VC professional judges for the competition. So that's going to be a big push in the spring. I think it's going to be in late February. So a huge thing we landed this summer for you guys, and a big push with the competition committee next semester.
Yeah, guys, I don't.
Well, it's not a different topic, but you can continue.
Yeah, just want to like emphasize how huge this is. This is a global competition, and there's going to be like big names coming on campus, like venture lawyers, venture capitalists, like schools that would never even step foot into Gainesville, like Carnegie Mellon, Georgia Tech, Michigan State, like, and we actually have the opportunity to host them here. And I just want to further emphasize, like, this is going to be a huge event for us and a huge event for UF as a whole.
Okay, so 2 questions. What do you compete with in the competition? Like, are you pitching a company or like an idea that you want to receive investments in?
Yeah, so basically the structure of VCIC in specific is the students come in as quasi-venture capitalists. So you essentially have to come in with a fund identity, which means like, what type of companies do you invest in? What stage do they have to be in? What type of vertical do they have to be in? You plot those things out. And then essentially these students are paired up with 3 startups. And you're tasked with coming up with a valuation with this business. And the way that we like to put it was like I mentioned earlier, like these companies, their valuation is based on subjectivity. So you vibe check them. You check literally the management team of those startups, the real startups. You get to speak with them, you talk to them, you talk about their revenues, talk about their business model, and then you deliberate in a room and you come up with something called a term sheet, which we haven't introduced to you guys yet, but it's essentially where these startups initially get the price, like how much they're valued at, what their valuation is, and what you see on headlines, like Instacart going from 24 to 9 billion, like those come from term sheets and follow-on rounds that venture capitalists do. And that's essentially what you're tasked with, and how good and how like basically you're throwing a dart onto a dartboard. Like how good and exact is your valuation of this business, and how justified is your valuation? That's what you're competing on. Yeah, go ahead.
I heard of someone from you about the analyst program, so I'm wondering if you could tell me more about that. If you know anything.
Sure thing. Yeah. If anything, this is pretty much where we'll end, guys. If you have any more questions, you guys can come up to us and talk to us. But you guys don't have to stay if you have to go. But yeah, thank you guys so much for coming. Oh wait, yeah, wait. Forgot about the newsletter. Sorry. So sorry.
One's back.
Sorry.
Yeah, so I'm the director of communications, as I said before, and one of the projects that I'm going to be undertaking is I'm going to sort of be putting out a newsletter, and that newsletter is going to range from having information about topics that we're going to cover, information about events that we're hosting as a club, but also occasionally we're going to have editorials where we talk about maybe recent developments in a growth equity sector, or just a current event that impacts the VC space overall. And we're going to have opportunities for assistant editors to come on and join the newsletter. So if you guys are good writers, or if you want to get better at writing and want to contribute to the club in this capacity, then feel free to reach out. We're going to have a QR code on the next slide to connect you guys in that way.
Just adding on to what Tony said, also like for the editorials part, if there's like a topic that or like a sector specifically that interests you, like you can go ahead and just like let us know if you want to do a newsletter on it. But it's mainly also just kind of to consolidate all of the information we tell you guys. I think there's a lot of events coming up, a lot of opportunities, and it's kind of just going to give you like a week by week timeline of like what to expect or like what opportunities you guys could kind of do. So yeah, there's a subscribe to like our newsletter so you can get these in your email. And then if you want to help out with making the newsletters, if you have any ideas for them, you can join the committee.
Yep. We're going to be sending the PowerPoints on these newsletters every week. And in addition to like the student body at UF, we're looking to get professionals to actually sign on to our newsletter. And so, if you do join the committee, like whatever you write will probably be seen by professionals as well. So keep that in mind.
That leads me part of what you'll be helping with as part of marketing.
Yeah.